Good morning everybody and welcome to this European session on Tuesday the 3rd of September. So let's dive in and have a look at some of the big economic news announcements and big market themes affecting the flows of the financial markets right now, and then go through some highlighted trading opportunities from the London and Sydney trading floors. So first of all, we know in the big picture all around the world really, the period of high interest rates are currently over. So the key is now what is next? Well, first of all, we know that the Federal Reserve is expected to cut interest rates this month and actually join the ECB, Bank of England, People's Bank of China, the Swiss National Bank, the Bank of Canada and the Bank of Mexico, who have all done the same thing as well in cutting interest rates. Now, the Fed Chairman Jerome Powell stated in a Jackson Hole symposium last week that the time has come for policy to adjust. And the European Central Bank and Bank of England are also expected to cut interest rates by 25 basis points at least 3 times this year. So now this becomes very, very interesting because we've been in a long-term period of high interest rates, or highest since the financial recession in 2007, but now we're starting to see an unwind of that. And this interest rate expectations is basically what has kept the currency market in some really good trends this year so far. And of course, the biggest theme over the past several weeks has been the weakness in the US dollar, with euro dollar, pound dollar, Aussie dollar, Kiwi dollar, gold, US dollar all rallying higher and the US dollar falling because of this expectation of the Federal Reserve cutting interest rates, which is now pretty much a foregone conclusion. But as we've been highlighting in the webinars, US economic data will become very important because the Federal Reserve will be using that to then determine the pace of interest rate cuts and also the degree. Because the market is currently now pricing a 30% chance that we could have a bigger interest rate cut than expected, a 50 basis point interest rate cut from the Federal Reserve later on this month. So set to be a pretty wild month for the US dollar currency markets as well. That could set the trend for really the rest of the year. And what could become quite interesting, something to keep an eye on, is that traders might start to shift their focus, right? Currency traders might start to shift their focus because everyone's been already readjusting their portfolios in anticipation of lower interest rates in the US. So people might now start turning their attention to the other interest and announcements that are coming out from the European Central Bank and the Bank of England. So we'll be watching those flows, of course, things like euro dollar, pound dollar with beautiful uptrends, and we'll look for the trend to continue, but also we need to be on alert for potential trend reversals as currency traders start to shift their focus, and we might start to get some weakness in the euro and the pound on positioning of lower interest rates in the future. So it's a big trend to keep an eye on, and a lower interest rate environment can also prove a bit of a tailwind for global stock markets as well. And because of this, weaker interest rates that are coming up, that has proved to be the case. We've had the Dow Jones 30 stock market index reaching record highs last week, the Germany 40, the DAX stock market, the German stock market, reaching record highs, the S&P, the Nasdaq very close towards record highs as well. So there's been some fantastic trends there in global stock market indices, and we're simply looking for those trends to continue and be supported by this lower interest rate environment. So some really good trends out there, really good moves out there. Of course, we've highlighted a lot of different trading opportunities around those US dollar pairs because that's where the biggest theme has been, and also some of the euro and pound pairs against the commodity currencies, where the commodity currencies right now still have higher interest rates, whereas we've had some weakness in the euro pound as we've had that rotation, that positioning into high interest rate countries and away from low interest rate countries. So we've highlighted those opportunities, and of course any more trading opportunities regarding these big global macroeconomic themes, I'll do my best to highlight them for you in these webinars, but make sure you're tuning into all the other live trading webinars every single day to identify and participate those trades as well. All right. And also, just a quick update on the high impact news announcements coming out this week. Yesterday I gave you a broad overview of what each one entails, but just to get a big picture here, okay? So first of all, today on Tuesday, we've got the Swiss CPI news announcement coming out. We have 3 p.m. the US ISM manufacturing reports. On Wednesday, big day for the Canadian dollar. We have the Bank of Canada interest rate statement and the Bank of Canada press conference. Why did you expect it? They're going to cut interest rates. On Thursday, we've got the US ADP non-farm employment report, and we also have the ISM services data as well. And on Friday, another big day for global markets, US non-farm payrolls, and also the Canadian unemployment reports. Now, we don't try to guess how the market is going to respond to these news announcements and what the result will be. We don't try to chase a trade and compete with the algorithmic traders who are reacting to news announcements literally within nanoseconds. What we look for is any surprises, okay? Because that's when you get the biggest moves. Because we know from day one, learn Forex, that everything is priced in, right? Because institutional speculators, they build positions ahead of time. That's why they hire thousands of analysts all across the globe. So they can anticipate future events and they can build positions in anticipation of that because their capital size is so large, right? So everything is already priced in. But if there's a surprise, okay, and if there's a surprise news announcement or a surprise decision from the central bank which catches everyone off guard, that's tend to be where we get the biggest moves in a short period of time. And again, we're not trying to trade those really instant reactions from the algorithmic traders because it's not going to work. You're not going to be fast enough. But then it's the follow through, isn't it? Because everyone's readjusting their portfolios. If we get follow through, okay, this is what can lead to some really high probability trends, all right? So if a news announcement is just as expected, then, the market doesn't really react to it. But, we keep an eye on surprises and then we keep an eye on any follow through that develops from that. Again, if anything happens this week, I'll try to keep you updated as well, but also make sure you're tuning into all the live training webinars to participate in those potential trading opportunities. All right, so let's dive into smart charts and let's have a look at some highlighted trading opportunities from the London and Sydney trading floors. Okay, so first of all, we're here in the 180 phase change on a daily chart and on Euro US dollar. So we've got some interesting things developing here. So if we look at price and how it's unfolded, what do we notice? Got above the moving average zone. We've got buyers turning up here, driving into new highs, came into the moving average zone, buyers turning up here, driving into new highs, and we're back into the moving average zone. Cycles are getting a bit bigger as volatility starts to pick up a little bit more, as we start to get more news announcements coming out regarding interest rates and all these kind of things. But we know the volatility of the market will change every day, every week, every season to season. But we do have some good clues that buyers have been turning up in this moving average zone. So it'll be interesting to see if buyers are going to turn up here again and keep driving this market higher, all right? And in this instance, so not only does smart charts help us to identify this opportunity, and if we look back historically, by the way, so if you zoom out of the chart, you can pretty much see that when the market is in a decent trend, we are bouncing off the moving averages that the smart chart quant team have found to be statistically relevant, all right? Because look how many bounces that we get off these moving averages in the uptrends, all right? So we get some decent bounces in those uptrends, all right? But also, in those downtrends as well, okay? So in this instance here, obviously, moving averages doing us a big favor here in identifying periods of time where the market is actually trending. So we have this repeated pattern of behavior of these moving averages, which we know in the past have worked out really well. And we also can see that historically we are quite far away from this multi-year high point. So there is an opportunity for buyers to maybe continue the trend all the way into this high point before maybe, it starts to sort of top out and, maybe even reverse. So we have not only what smart charts has found for us, but we can also see visibly on the chart that we're in an area where buyers have turned up here before. Now, to participate in trading opportunities, smart charts makes it super simple for us, because if we click the buy icon here, we'll populate an entry price at the blue dot, stop loss at the red dot, target the green dot. These can all be adjusted according to your own user preferences, of course. It'll do the risk management calculations for us as well. Important to keep the risk low to make sure you're able to deal with the random distributions of wins and losses that develop throughout the month. And also we like to set an expiry, and we use a current bar close. And basically what that means is that, look, if buyers don't turn up here, okay, if they don't turn up by the end of the day and get through the entry price level, this blue dot, your pending trade expires. You didn't win, you didn't lose, it didn't cost you anything, all right? But if buyers do decide to turn up and continue to move and get through that entry price level by the close of this daily bar, then this will trigger into a live open trade. Then, you know, either it goes to your target level or it goes to your stop loss level. All right. But because we're looking for momentum, because obviously you're trading on margin, we want to make sure we're exercising proper portfolio risk management. All right. Also, we have been looking at a few other currency pairs, such as pound New Zealand. Now, we know the New Zealand dollar has been one of the strongest currencies over the past several weeks as well, and we've seen a massive rotation out of lower interest rate currencies like the British pound, like the euro, into higher commodity currencies like the Aussie, like the Kiwi. All right, so we've had a nice downtrend on euro Kiwi, pound Kiwi. Now, we have been trading that, if you recall, last week we had the market breakout strategy for this short trade here. Okay, so if you remember that from last week, we had that market breakout strategy here, which worked out very nicely. And we also said that we're looking for this trend to continue. All right, because in this instance, we're in this moving average zone. Look, sellers turned up here before, sellers turned up here before. We're in this moving average zone here. We're looking for clues to see if sellers are going to turn up here again and just continue this overall trend that we've been seeing here on the higher time frames. All right. So in this instance, we also have price on this angle of price as well. So there's on this trend line here where sellers have turned up before. And of course, what Smart Charts is analyzing for us as well with the Bollinger Bands and the moving averages. So we have a confluence of areas here where sellers might actually decide to turn up. And if you recall, we were trading the breakout last week on the market breakout strategy of this wedge pattern. And that was a short trade that we had on that breakout. And we can also see prices broken through the wedge pattern, is now retesting this neckline here as well. So we have a lot of confluence here on why sellers might decide to turn up here and continue this move lower, which is in line with the higher time frame as well. So again, to participate in this, Smart Charts really helps us here by clicking the sell icon. It'll populate an entry price at the blue dot, stop loss at the red dot, target the green dot, do all the risk management calculations for you. So of course that can all be adjusted according to your own user preferences and discretion, but important to keep the risk low to make sure you're able to manage and deal with the random distributions of wins and losses that develop. And then on body bounce, we'd like to set a current bar close expiry, so just in case if sellers don't turn up, that's fine. Pending trade expires, we look for the next opportunity of high momentum where sellers and buyers could potentially turn up. And also, we've been looking at the US dollar pairs. Okay, so we know US dollar Canadian could be pretty volatile here this week with all the different news announcements. So again, we manage risk accordingly, but really we look for the follow through if anything does happen. But of course, everything's priced in, so we're happy to keep on trading the trend because maybe everyone's already building a position on the anticipation of what could potentially happen. So from a technical standpoint, we have something quite interesting here on the market breakout strategy. What do we notice? We're back in this moving average zone where sellers have turned off this moving average zone before. And if we connect the dots on how the market has been flowing off this zone, what do we notice? Sellers got below the zone here. It came back into this moving average zone where sellers turned up, drove it to new lows, and we're now back into this moving average zone. So we're at an area where sellers have turned up before, and we know last time sellers turned up, they were happy to keep driving it to new lows as well. We also have this angular price where sellers have been turning up before, so we're at this angular price again where sellers might decide to turn up once more. So we're in this kind of zone here, looking for clues of sellers are going to turn up and continue this move lower as they did here and get a continuation of a trend. So then to participate in this, by pressing the sell icon, Smart Charts will populate an entry price at the blue dot, stop loss at the red dot, target the green dots. Of course, all those price levels can be adjusted according to your own user preferences. Do the risk management calculations as well. Important to keep the risk low to make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. And on the market breakout strategy, we'd like to set an end of day expiry because we give it a bit more time on this particular strategy because it's utilizing fractals, okay, rather than the previous bar on the chart. If you're not too familiar with the strategy rules and what Smart Charts is helping you to do, then of course, you know, speak to your coach in your coaching sessions, look at the e-learning portal section of Smart Charts. I mean, you've got a ton of resources there inside of Smart Charts that really support you in your trading and your education, all right, and knowledge. So in this instance, let's see if sellers do decide to turn up and continue this move and get a continuation of a trend. Now, of course, okay, those 3 trades, we're looking for trends to continue. But of course, it's the beginning of the month. We might actually see trends not continue. If no one wants to turn up so early on, maybe there's a lot of high impact news announcements coming out. A lot of the institutional players will say, actually, do you know what? I'm going to wait. I'm just going to wait for all these news announcements to pass. Then I'll start putting my money into the market. So in this instance, sometimes the trends might not continue. That's okay. Pending trade might expire. You didn't win, didn't lose, it didn't cost you anything. But as traders in the financial market seeking performance, the key here is to be prepared. That look, if buyers or sellers do decide to turn up, continue the market in this direction, I need to be ready and waiting to capitalize on that potential trading opportunity. All right. Whatever happens after that, we have no control over. So make sure you're focused on the things that you have control over. All right. Okay, that's it from me. Thanks for tuning in. All the best for your trading today. I'll see you next time. Bye for now.